What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so let's make a full breakdown of the situation that we currently have on USDCAD. Now, why do I want to break down USDCAD? Because at the moment it is very near to providing to us another great trading opportunity. So it's definitely time to make a full breakdown and show you guys where we can be looking for this opportunity. As usual, I will be keeping this analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective to see what hedge funds, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the highest probability opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a nice impulse to the downside, followed by the correction, and the market is currently providing the continuation to the downside. Now, usually, in a situation like this, where you have an extremely strong downtrend, only one retracement candle, and the market starts the move to the downside, usually this means that we have a very strong bearish momentum on the pair, and we can expect this new impulse to go even lower, basically to create a new leg to the downside, leaving only this green candle as a strong supply area, which at a later stage the market will go and retest. So here on the monthly time frame, everything looks still very bearish and we can expect more continuation to the downside. Going down on the weekly time frame, what do we have? Now here on the weekly, the structure and price action is very clear. We have a market which at this area had found very strong support. In fact, the market tested this zone here and got rejected to the upside. Again, here tested and rejected. And currently the market has just broken back below this previous support, which is now turned resistance at this area, from which we can definitely expect the market to provide a rejection to the downside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, what we can see is that the market has just tested exactly the 0.618 of the Fibonacci taken on the impulse, which is the golden ratio, which currently is lining up perfectly with this previous support turned resistance, meaning that this area actually at the moment is a confluence of resistance zone from which we definitely expect the market to possibly provide a rejection to the downside. Going down on the daily time frame, what do we have? Now here on the daily, we had a market which had created a pretty strong overextended M formation. Now, generally speaking, after the creation of an overextended M formation, you want to see the market create a move to the upside. In fact, I made a full breakdown of USDCAD when the market was at this area, explaining all the reasons for which, from here, we expected the market to provide this move to the upside. And in fact, that is exactly what the market did. And by the way, I will link this previous analysis in which I explain all the reasons for which we wanted to see this move to the upside in description, so you can go and check it out for further reference and more free education. If you have any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, here on the daily time frame, what we have is a new impulse and correction. In fact, from this high to this low, the market has created a pretty strong impulse. And if we want to measure this correction, as we already did on the weekly, we have to take our Fibonacci from the high to the low. And if we do that here on the daily, we can see how at the moment the market is in between the 0.618 and 0.786 of the Fibonacci taken on this daily impulse to the downside, which also in this case is lining up with the previous daily support, which is now turned daily resistance here. So all this zone is strong resistance and supply, from which there is definitely the possibility to see the market create a rejection to the downside. Now, if we go and see what we have from a COT perspective, what do we see is that on the CAD lately, hedge funds have been decreasing their net positions. In fact, we went from having 15.3k net positions all the way down to having 10.2k net positions with 1.6k shorts added with the last report. Now, obviously, if net positions are decreasing, it means that hedge funds are shifting their positioning to the negative side, so to the short side of the CAD, which means that on USD CAD, you expect a move to the upside, because if hedge funds are shorting the CAD, you expect USD CAD to be strong. And in fact, the market created the move to the upside. However, if we look at the long term, we can see how we went from having minus 21.2k net positions, so way more shorts than longs from an institutional perspective on the CAD, to having 10k net positions, so more longs than shorts, meaning that we had a clear shift of the positioning, making the CAD in the long term quite strong. And in fact, that is exactly the reason for which USD CAD has been trending to the downside quite aggressively, because hedge funds from an institutional perspective were adding longs on the CAD, which means shorts on USD CAD. So overall, in the long term, we can still expect more continuation to the downside. So there is definitely the possibility, as we have already seen on the monthly and weekly, to see the market create a continuation to the downside. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective inside of this area, waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding USD CAD to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to provide a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.